Okay, so this is the last problem for chapter 2, and you will be doing well, it'll open. You'll be doing problem number 238. So I'm going to look at problem 239. So in problem 239 and in 238 both, what you're going to be doing is making an income statement for a manufacturing company and a schedule of cost of goods sold. And so in 239 from your book, you're given information on the direct materials, work in process, finished goods, inventories beginning and end, and then your purchases, your labor, and your overhead. And you're asked to prepare an income statement and then a supporting schedule of cost of goods manufactured. And so in order to put these in good order, in good form, you start with the name of the company. And there is a way that Generally Accepted Accounting Principles prefers that we format these. And this one is going to be in millions. And I'll have revenues, I'll have cost of goods sold, and I'll calculate that by using my finished goods inventory. So I'll start with my beginning finished goods inventory, and I'll add to that my cost of goods manufactured that I'm going to calculate in a supporting statement. And then I have my cost of goods available for sale, which is my beginning finished goods plus my cost of goods manufactured. And if I subtract my ending finished goods, then I have my cost of goods sold and subsequently my gross margin. Then I subtract my operating expenses, my period expenses, those that are not product expenses. And then you can do a little bit of formatting if you want to. It always looks nice. So my revenues in millions was 950. My beginning finished goods was 70 million. My cost of goods manufactured that I'm going to calculate below, so we'll do that in just a minute. And then my ending finished goods, which gives me a cost of goods sold of 660. And I'm going to go ahead and use formulas here so that you'll see. Actually, I'm going to back up so you can see how this flows through. Cost of goods available for sale minus what I had left over is what I sold. So my gross margin is my revenues minus my cost of goods sold. My marketing expenses are given to me, and that finally gives me my operating income, which is my gross margin minus my operating expenses, or 50 million. And again, you can go ahead and format these if you want to. It's a good idea to add some underlines. Okay, now under this, we're going to do the cost of goods manufactured statement. So we still have the Howell Corporation, and this is part of the financial statements according to Generally Accepted Accounting Principles. And so you do have to put them in the right format. And an income statement is for a period, not a snapshot. And so we always say what the period is it for the month of December or for the year end of December 31st? And then if we do it in millions, we have to specify that as well. And again, you can go ahead and format this however you want to. But I would like you to format your homework professionally. One, because it's easier to read, and two, because it's good habit. So in the cost of goods manufactured, what we do is we take our direct materials, direct labor, and manufacturing overhead, and we figure out what it cost us for that period, which happens to be for the year, what it costs us to make our product. So we start with our direct materials, and it's very similar to what we did with finished goods. We start with our beginning inventory. We add our purchases, which gives us our cost of direct materials available for use. And then we subtract our ending inventory. And then from that, we have our direct materials used. Then we add to that our direct labor cost. And then we add to that our indirect manufacturing cost. Okay, so I paused it while I entered all of the indirect manufacturing cost. And then to that we take our beginning work in process, and from that we get our total manufacturing cost. So if you think about what we're doing, we take our beginning work in process, so what we started the year with that we were working on, we had not completed it, we were working on it, and we added to that, I'm having trouble with this. Okay, we added to that our direct materials used, our direct labor, and our manufacturing overhead, which is our indirect manufacturing cost. That gave us our total manufacturing cost. And then if we deduct from that our ending work in process, so in other things we have not finished, that should give us our cost of goods manufactured. And what that means is, what did it cost us for this period to manufacture the goods that we completed? So our direct material cost, beginning inventory was given to us, $15 million. Purchases was given to us as well, and so what we have available for use are the two added together, and then our ending inventory was given to us, and so our direct materials used would be the materials we have available to use minus the ones we didn't use. So kind of chew on that a little bit, make sure you understand how that whole process works. Direct labor was given to us, that was $100 million. And then all of our manufacturing overhead or indirect was given to us as well. So we can sum all of that up to get our manufacturing cost. And then to that, actually I think I've got, hold on, I've got an error here. Did I get everything? Indirect, plant supplies used. I didn't get my plant utilities. My plant utilities were $30 million. Okay, so I've kind of like messed this whole thing up. I was not paying attention. That's 60. Plant supplies used 10. I'm going to get these back in order and what they're given to you in the book so I can make sure I have them right. Depreciation on the plant and equipment. That's what I get for doing that in a hurry. And then I have my plant supervisor salaries. $5 million, and then this is my miscellaneous, 35, and that shouldn't even be there. Okay, so my sum, to keep this in good order, is right here. Okay, now our total manufacturing costs are all my direct material, direct labor, and indirect added together. That's what I was trying to get to. So my beginning work in process is $10 million. So if I add those together, that gives me my total manufacturing cost to account for. And I had $5 million still sitting in work in process, so I didn't complete those. And so my cost of goods manufactured is $645 million, which is what I put right up here. And again, you might want to use some formatting just to make this look good, and it's easier to read also. That was part of what my problem was. I didn't format this well as I was going and caused problems for myself. Okay, so there you go. That's how we calculate it, cost of goods manufactured. And so again, I'm not real big on memorizing things. I want you to understand and learn. But you do need to know for sure the core income statement, revenue minus cost of goods sold, is gross margin minus operating expenses gives you operating income.